South Korean households are among the most indebted in the world. Their debt is even greater than the entire country's economic output. In 2022, it declined for the first time in 18 years. And analysts say it could fall further. CNA's Lim Yong-suk explains.
This development was once expected to be highly sought after among South Koreans looking to own homes in the capital, Seoul. Designed to accommodate more than 10,000 households, it is the country's biggest residential project. But with bank interest rates on the rise, it's becoming a hard sell. Even those who came to finalize and sign their contracts admitted it was not an easy decision.
금리가 인상되면 당연히 힘들고요. 이번에 청약 계약하는데도 고민이 좀 있었는데, 위치도 좋고 그래가지고 계약을 결정하게 됐습니다.
Since last August, the Central Bank of Korea has raised interest rates from a record low of 0.5% to 3.5%, the highest since 2008. South Korea's 5 major banks also had their average mortgage rates move within a band of 5.47% and 8.11%. It's the first time since the 2008 global financial crisis that the upper limit of the rate has topped 8%. And there are now some expectations the Central Bank of Korea could halt the hikes in the coming months. This amid concerns any further hikes could cool economic growth by slowing consumption and corporate investment. The move would also ease the debt burden on people who have taken out loans to survive during the COVID-19 pandemic or buy homes. Lee Chang-yong, the Bank of Korea's governor, recently told the foreign media that he didn't think the household debt would cause instability in the short term as banks were well capitalized. But he did voice concerns about how the proportion of short-term debt and floating rate loans was relatively higher in South Korea.
As such, consumer spending and economic activity can be more sensitive to monetary tightening and to any decline in housing prices. The accumulated impact of interest rate increase could lead to an aggravating trade-off between inflation and growth, making monetary policy much more difficult.
High interest rates have slowed down borrowing, and people are reluctant to take out loans to buy homes like in the past. And while home prices have started to drop, many are still adopting a wait-and-see approach. In December, the number of apartment transactions in Seoul stood at only 578, down by about 50% from the previous year.
For the richer part of the households, they will probably not want to get any more housing at the current time because the price of housing is dropping so quickly. So unless they're convinced that the housing prices have bottomed out, they will probably not have the incentive to borrow more to pay back housing. So at least for now, household debt will probably remain steady or fall a little bit.
In early January, President Yoon Suk-yeol removed many of the restrictions imposed on the housing market by his predecessor, like lowering taxes and allowing people to borrow more. Apartment owners also need to live in their property for 1 year before they can sell, and not 8 years like in the past. It's too early to tell what impact these measures will have on the Korean economy, but experts believe that housing prices will continue to fall at least a bit longer. Meanwhile, South Koreans will be eyeing the market closely, waiting for the right opportunity to buy their dream homes in capital Seoul. Lim Yong-suk, CNA, Seoul.